Good morning, ladies and gentlemen. This is Clueless 8 Trading Frank, August 29, 2017, approximately 8:45 a.m. Eastern Standard Time. This is a quick, short update on the North Korean scenario with the missile launch over northern Japan. All members and free trial subscribers have been updated on the breaking news on the real-time Twitter feed. Highly suggested and mandatory that everyone follow the real-time Twitter feed for trade alerts, precision trade alerts, tactical charts, as well as breaking news and a short commentary on the markets, which are going to be extremely relevant to traders and investors. Just want to go over quickly to what the possible scenarios could be today as we move along this path of heightened global tensions. This is a very serious matter. For that reason only, I kept on saying since the past 2 weeks that having hedges in the form of VIX calls, or if one chooses SPX puts, I chose the VIX calls because the movement, the elasticity, and on the VIX calls have been extremely profitable for us, and many of you who have done that know that very well. They're cheap, they move fast. We live in very extreme volatility environment, so obviously any moves such as the North Korean type of situation, diplomatic international diplomatic tensions, as well as political news flashes from Washington, D.C. can move the VIX rather rapidly off the low levels that I keep on showing on the VIX charts. Highly suggested that you guys monitor it on your own screens as well as mimic my chart on your screen so that you know how to effectively manage your trades. Everything I'm saying is an actual fact. This is the real deal, not the fake stuff that you might hear somewhere else. There is no one method to handle volatility. The only method is you just don't do anything, in which case you miss out on substantial gains that we have shown repeatedly despite volatility. And the bottom line is that real traders, in my opinion, stay engaged with the markets, sometimes with a large exposure, sometimes with a lower exposure, but they engage the markets on a long and short fashion every single day, every single week, every single month, every single year. So, saying all that, let's just go over the technicals. This is the pattern symmetry chart, which has played out extremely well through extreme volatility. We have managed to get these very large moves on the markets all the way from the 2400 level or so. Keep in mind that this is the E-minis we are talking about, so you have to add roughly four or five points on 4 or 5 points on the to get the actual SPX figures. My SPX charts are also delivered, and you can scroll down under the media section on the real-time Twitter feed to review all of them. Okay, so at this point in time, the lows back around the 20th, between the 20th and the 22nd, the what do you call it? The tactical lows was approximately around, and I'm just giving you approximate figures here, somewhere around the 2415, 2416 level. We didn't quite get there on the drop yesterday. This was the North Korean missile launch. I'm not going to say missile attack. It's a missile launch. They didn't attack Japan exactly, in which case futures would be down 100, limit down, and we would have a catastrophic global situation. So again, this is a dangerous situation. Let's face it, markets behave differently. They behave in a very technical manner, and this is what they're doing. This was the initial drop, then the big hammer reversal right off there, which was approximately off the 2422 level. You can see that. All right, 2424 level. At this point, we have recovered roughly 11 points. Futures are down 15. We were down approximately, I think we were down about 27 points at the worst. And we have recovered a little bit. Doesn't mean anything. This is a 1 hour chart here. So for futures traders, they can use this effectively for maximum gain, because we went up, we went down, we did a sharp V-shaped reversal right there off the lows, hammer reversal, went up, then the futures and then this morning around 4 in the morning, this is what happened. We moved up a bit. So anyway, I'm going to show this to you on the E-minis on the Thinkorswim platform, and it's much more. It's a little bit more clear with the Fibonacci retracements. So anyway, right now we are almost overbought on the 1 hour chart. If we do get a move up, you're going to hit the downtrend line here at 2436. That's roughly about seven S&P points up here. All right, seven to eight E-minis. Probably 10 S&P points. How about that? From this level to here. If we do break out over this gap fill zone, and this gap has been filled multiple times, right this red line here, then you are going to basically see the market go back into the range trading mode, which I've consistently said is between, and you can see that too, 2436, and on the high end, and roughly around 2447. 11 S&P points, roughly about 70 to 80 Dow points. That's the range that the market's been traveling in since, as I've mentioned, as I've stated many times on my charts, since this very large cup. There was the handle, there was the breakout, and then the market got stuck in a range. And that range is roughly around 2442 and 2436. In fact, it's a tighter range. We're looking at roughly 6 points. In between, a bunch of our stocks have delivered humongous returns, including most recently as yesterday, Apple, Amazon, a couple of biotechs. One of them got bought out, which was a swing trade recommendation from months ago, which was Kite Pharmaceuticals, KITE, in sympathy, Juno Therapeutics, and a few others ramped up. Anyway, so let's talk about patterns here. So here's your cup, here's your handle, here was the breakout. Now we're basically stuck in this range. No longer. We have the third black swan event, because this is North Korea. This is the third time they're doing this, right? In the past month or so. Now we are down here in this level. Let me just clean this out. Get back to the pen. Worst case scenario today, if nothing else happens, okay? I'm repeating, if nothing else happens overseas or from this side, we don't have a extremely harsh military response type of statement. I said statement, not a military response. If we have a military response, you can short the market for at least 24 to 48 hours and make a ton of money. Okay, if there's a military response from the US side, from the Japanese side, South Korean side, or the North Korean side, if they land one directly into South Korea or Japan. North Korea ain't reaching the US, all right? Just letting you know. So the bottom line is that then we are looking at levels way below here on the S&P 500. We are talking approximately 2350. At this point, if nothing else happens, we have a level of roughly 10 points from here to the lows of these lows between the 20th and the 22nd, right there. Okay, these are extremely mathematical markets. We have consistently proven it. Active traders can play my charts, trade S&P for 3, 4, 5, 6 points. We did that. We have been doing it successfully through every single type of market environment, and I believe it can still be done. But those are for active, focused, non-tactical traders who basically follow charts. Emotional traders can follow the numbers and do whatever they need to do. I really can't help emotional traders, it's a different ball game. Maybe a shrink or a therapist can do that, but that's not my job here. Okay, so saying all that, let me just go back to the other chart, which is this one. This is extremely one second here, which is extremely precise and mathematical. Here's your Fibonacci retracement. This was the low on the 21st at approximately 10:45 a.m. right there. Big hammer reversals that we caught. We were actually long here. We bought here. Big hammer reversal. That low is 24.15.59. So these are not just for your SPX trading. These charts are put out there that I've sent probably 1,000 times for effective trade management on the front end of your trading book, which is individual stocks. All right, SPX traders obviously benefit tremendously. So I don't know the pattern yet here. I mean, I do know the pattern. I don't know exactly whether or not we're going to test 24.15. I believe we do. That would be a sort of standard procedure. In that case, we would have another very large. This is basically what we went into. This was the cup, right? This was your handle. This was the breakout. This is the range that we've been trading till last night's event, North Korea's missile launch over northern Japan. Now we are falling back here. We should technically test the 24.15 level, but should, could, and what I think really is not the issue. Because if every trader and a lot of institutional traders looking at the same level, well, the algos are not going to take it there. That's just the nature of the beast. A watch pot never boils, right? So whichever the case, we're just kind of talking about a few points. If it does move here and nothing else, I repeat, happens and the attentions are not escalated but de-escalates, we should have a sizable bounce to the upper end of the range, which is again between the 24.45 to 24.50 level. These are extremely profitable trades. Extremely profitable trades. All right, so that's basically it. If we break down here, you're going to get further roadmaps and charts as to where we can go. I have discussed lower levels on my precision videocast, so feel free to take notes when you listen to those from previous weeks. Let's take a look at where we are with the technicals. This is a 4-hour chart, the closest cousin to the daily. We are oversold, but as you can see here by the slope and the curvature of the stochastic parameter lines, we are not down here. This is where we want to be. We want to be down in this zone. We want to be down in this zone for maximum aggressive buying as long as tensions do not escalate. That's around the 4 level on the full stows. These are default numbers. I don't tweak them around. One of my members asked me if I tweak the volume and the stochastic parameters and other indicators I use. I said no. I am not that smart enough. I simply follow what's given to me, and believe me, I'm a damn good reader of these lines and profit from them more often than not. Okay, so bottom line is this was a bullish reversal, got stopped here at this, and this is getting into a little bit detail, so I don't want to waste too much time. This is the downward sloping 5 SMA. Simple moving average. That's basically the trader's tool. This is still downward sloping unless it starts to carve around a bit. We are going to keep on hitting the 5 SMA and getting pushed back. That is resistance. All the other resistances are put in place. This is your 50. This is your 34. The crossover, the 50, 34 over the 50. And I repeat, the downward sloping 50. But anyway, the crossover happened here. That is still intact. If we cross over now this orange line, which is the 34 moving average below the 50, then you are going to have another leg down. Whichever the case, prepare for extreme volatility. The VIX calls, as far as I can see on the Thinkorswim side, on my positions are up almost 500% or something like that I saw, because they were approximately at 20 to 25 cents. They were showing at $1.40, $1.50. So that's a lot. And it was very cheap to buy those at 20, 25 cents as a hedge. People who listen, hey, that's like I said, you got to have protective puts in these volatile markets. There's way too much overnight risk. Apple's down about $1.40, no biggie to be honest with you, which is has been a core position for the past couple of weeks, if not for the past since last week. Delivered big numbers yesterday in the range of about 130% or so. Avago, which was a earnings miss, a slight move higher, and then it pulled back, broke below the channel. That's why I put charts out there, so you can see it and you can act on what you think. You know, if it broke a certain level, you're out of it. Anyway, to make a long story short, this is not a day for me to go in there and say, okay, you know, buy this and sit there, everything's going to be okay. This is a day for most non-tactical traders, which I think most of you guys are, to be honest with. Some of you have really transformed into tactical traders, which makes me really happy. But for most non-tactical traders, I suggest that you move away, sit back a little bit, let the market settle, follow my real-time Twitter feeds, track the charts, and just have a nice cup of coffee or something. All right. In the meantime, Lockheed Martin's up about $1.69. That could be a play today. That will be a play today because of the missiles, right? And fighter planes. And the bottom line is that at this point, just keep a close eye on things. And like I said, if the market does feel that that's not going to be a real escalation of tensions, it is going to do a ripper. There's a gap here, right? these gaps, 24.34, 24.39. It's going to take that out and it's going to go to the upper end of the range. This is not a market of breakouts and breakdowns. This is a market of range trading. Today, we broke down on the lower end of the range, and that's what I keep on preaching. Sign up for the advanced coaching sessions. They're worth your time for a few extra bucks. Believe me, the stuff that I have learned the hard way and profited from is what I share and I teach in detail. Have a great day. God bless you all. God bless the USA. We are still the strongest nation in the world, guys. And no one is going to come around and mess around on US soil. That I can tell you that. Thank you very much.